And good evening. This is Mottek on Money. We're doing it live right here, weeknights in the 5 o'clock hour in Los Angeles. Mottek on Money 5 nights a week for you, live on the air here in 790 KBC. Streaming live online worldwide at KBC.com and the on-demand Mottek on Money podcast at KBC.com, Apple, iTunes, all your favorite podcast platforms. And yep, on the socials too at Frank Mottek on X, formerly known as Twitter, and Instagram. Another triple-digit move for the stock market today, this time on the downside, with the Dow down nearly 400 points at the closing bell today as investors took in some downbeat news on China's economy, better than expected retail sales numbers on this side of the pond. Also, new worries about banks, higher mortgage rates, and, the political and legal battle that's playing out in Washington. And this political season, the indictment in Atlanta of former President Trump and not the latest round of weak China economic data is the reason for the early struggle in the stock market today, according to CNBC commentator Jim Cramer. Got on that story early on, noting that China responded to weak data with a surprise interest rate cut. He tweeted out that the market might instead be focused on the presidential race, with President Trump criminally indicted by a grand jury in Fulton County last night in connection with an investigation into his efforts to overturn Georgia's results in the 2020 presidential election. Of course, the 790 KBC News Department covering that thoroughly today. Also, concerns about a faltering Chinese economy, again dampening the global risk appetite, while investors in the stock market also gauging what a strong consumer means for the economy and the Fed's future interest rate policies. We did see retail sales of 0.7% in the month of July, above the 0.4% most analysts were expecting, and taking out auto sales, they grew 1%. The strength was uneven, with sales falling at car dealers, furniture stores, and big box retailers offering consumer electronics. Another reading on the economy today from the Empire State New York Manufacturing Survey for August, dropping to negative. Home builder confidence also down, according to the National Association of Home Builders Index for the month of August. That was the first drop seen in that index in 8 months, dragged lower by high and rising mortgage rates, along with challenges for the construction industry. Shares of D.R. Horton, Lennar moving higher, meanwhile, after Warren Buffett's Berkshire Hathaway revealed new positions in those home building names. D.R. Horton shares up nearly 3%. Lennar ended up nearly 2%. Home Depot shares up nearly 1% after the home improvement retail giant's second quarter earnings fell, but beat analyst expectations. We're also watching the hot labor summer continue here in Los Angeles. We'll get an update on that this evening, and also talk about what's happening with the local economy. Joining us this evening, I'll be speaking with Mark Wilbur, former chairman of the Los Angeles Business Federation, LA BizFed, former associate dean of the USC Marshall School of Business, and current chairman of Employers Group. We'll also talk about what's happening with the retail sales numbers, as well as the crime situation out there with smash and grab robberies, shoplifting, and outright thievery continuing to impact retailers, and ultimately you, the consumer, is picking up the tab for the billions in losses sustained by retailers big and small. Mortgage rates, ticking higher every day for the past week. In fact, for the past several weeks now, it's nervous time in the real estate business again. We'll get an update on what's happening here with Jeff LAZERSON, president of MortgageGrader.com and Orange County Register real estate columnist. But first, on your money, the markets, the economy, crypto, AI, and the whole works tonight. Joining us live now, the one and only John NAJARIAN. Dr. J, as he's known on the major financial networks, co-founder of Market Rebellion, and he has the laser eyes on, too, following the cryptos closely, including Bitcoin, which, by the way, is up 76% since the start of this year. Up about 12,500 to 29,169 at last check. John NAJARIAN, thank you very much for taking the call here. A lot of moving parts here today. Give us your view of things here at the moment.
Well, I think you nailed it, Frank, as usual, at the top of the show when you said the China numbers are concerning. And as much as people had focused on what Home Depot would declare as far as strength of consumer, outlook going forward, and so forth, it was really China that weighed on the market so heavily today, because world's second largest economy, seemingly imploding. We expected the Chinese economy, once they reopened, which, they were clamoring to do. They were sick and tired of being locked down, and their lockdowns were obviously far more severe than in the Western world. But nonetheless, we expected them to come out with, an awful lot of firepower. And instead, it's been more like a firecracker. there hasn't been much in the way at all of demand for Chinese goods and services, and that's why the unemployment rate, which they tracked for allegedly the last time for their young employees, or unemployed, I guess we should say, is as high as 21% for those younger people who are seeking jobs. And that is just horrible, obviously. We're looking at an employment picture here that is far, far rosier than that. And yet China is supposed to be one of those places where, you can put massive amounts of people to work to create goods, not necessarily services, but goods, and sell them worldwide. And the demand has just ebbed dramatically. Also, the Chinese that are spending on their own goods, and in this case services, in China has just fallen off a cliff as well. So they made a whole bunch of cuts today, Frank, to various rates in an effort to try to get their economy stimulated. And obviously that'll take weeks, if not months, before we know the result. But at least for the time being, China's a real drag on the global economy.
Along with all of that, certainly the political environment certainly coming to a head, it seems, and also the retail sales report, which had a lot of people thinking the Fed may not be done with interest rate cuts, given the fact that retail sales came in better than expected, despite the credit card interest rates being at record highs as they are, and people are still spending out there. What about that part of the equation?
Exactly right. Well, as you say, the Home Depot numbers certainly weren't as bad as we feared they could be, although apparently the big ticket items, let's say primarily appliances that are over $1,000, think washers, dryers together, stoves and so forth, those were not moving as quickly as they'd hoped at Home Depot. And thus, year over year, the sales of overall appliances was down some 5 to 7%, which is a shocker. But nonetheless, the Home Depot chairman said that they see the potential for the U.S. consumer coming back, and perhaps these were just purchases that were put off because of the high interest rate environment right now. I would think that overall Home Depot is going to be fine. I'm not saying it couldn't drop 5 or 6%, but I think overall on a dip like that, I would be a buyer, because with fewer buyers qualifying, because you said you have some mortgage specialists coming on, Frank, with fewer buyers qualifying at these 7.5% or higher rates to purchase homes, the same home, by the way, folks, if you did a 30-year mortgage calculation on a $400,000 mortgage at 4%, where you easily could have obtained that a year ago, that same mortgage now at 7.5% is $1,000 more per month. And so you've significantly cut the number of applicants that could apply for and obtain a mortgage. And that's worrisome, but it's also potentially, believe it or not, a positive for Home Depot, because other than fixing your home up to sell it, if you don't think you can sell your home, you're still more likely to basically try to make the place more to your liking, whether you want to call that more livable or just upgrade a little bit. And I think some people will be doing that across the country. So overall retail sales numbers today were good. They were better than expected, and that's a positive sign. But the negative side of that is, of course, it'll give them more fodder for bearish chatter into Jackson Hole, which is just a little bit further down the month from now.
Excellent points there, and certainly more a feathering of the nests happening here, it seems, in Southern California with the affordability and availability, big issues here. And yeah, we will be talking more about that later this hour. Well, let's get to the exciting stuff now, cryptos and the Bitcoin up, nearly 80% since the start of the year, bouncing back from that crypto ice age or winter, whatever we called it back then, right? So What do you see ahead here for the cryptos and that big move we've seen so far in 2023?
Well, and that big move has been despite the guardrails, or not guardrails, the on-ramps for fiat to crypto being taken away, with Silvergate and Silicon Valley Bank and others that were friendly to cryptos basically being taken out and absorbed into larger firms like JP Morgan or Wells Fargo, who aren't nearly as friendly to cryptos. Despite that fact, cryptos have hung in there and have held above the 29,000 mark, obviously breaching 30,000 a few times. U.S. dollar-based crypto, the Bitcoin to the U.S. dollar, I'm talking, of course. But today, I think, Frank, the news was pretty much focused on Binance.
It's time for kickoff, and the Believe podcast will get you ready for the new season.
How do you live through this as a Detroit sports fan?
Believe has podcasts covering all 32 professional teams and many of your favorite college teams, too.
You solidified your defense. You got better.
Sideline to sideline, end zone to end zone.
If you don't do those things, then you're not even trying your hardest to win at football, and I don't know what we're doing.
There was a lot of great players on those teams that I was fortunate to be part of.
Search BLEAV podcasts wherever you listen.
A lot of us probably struggle with sleep hygiene, how to fall asleep, stay asleep, and get restful sleep. But did you know that improving your sleep hygiene could help improve your overall health? Health Break, a podcast by UPMC Health Plan, dives into this topic with advice and tips you can use from our expert wellness health coaches. Listen now to find out how you can start improving your sleep at upmchp.us/healthbreaksleep. That's upmchp.us/healthbreaksleep.
And the gentleman who runs it, who's known as CZ, just by those initials, and they are cutting a number of their services right now and really focusing in on their core business, which I guess tells us that the fall that we saw from Coinbase and from some of the other cryptocurrency-focused brokerages like Kraken and so forth that are domestic, crypto.com, those they haven't come out of that crypto winter you spoke of yet, even though the currencies themselves, Ethereum and Bitcoin, have pretty much rebounded nicely this year.
Right. Those headlines involving Binance include Binance filing for a protective order against the SEC. FBI seized almost $4 billion from Binance account users in May? Is that that's what it's looking like? The future of crypto hinging on a fight between the SEC and a former burger flipper. Let's see what else. Binance Connect shutting down on August 16th. So what does this mean to the average crypto trader who's any impact immediately on any prices or any other of those names that you followed?
Very, very little impact so far. Binance is, of course, one of the biggest exchanges for cryptocurrencies, but it's mainly available overseas and soon only overseas. In other words, Americans would have to go through a virtual private network or VPN to reach them. They're not on shore anymore, like, for instance, Kraken is, or Coinbase or Crypto.com are. So that will Americans are falling as far as a percentage of crypto users globally. At the peak, we were maybe close to 19% of crypto. Presently, we're expected to see new numbers in the near future, but I believe it's fallen to perhaps 14 or 15% of global crypto trade. And a lot of that has to come, Frank, from that situation you and I described when you take the on-ramp away, the banks that are friendly taking fiat currency like the U.S. dollar in and letting you flip it into basically Bitcoin, where from Bitcoin you jump into the other cryptocurrencies. If that on-ramp is taken away, makes it very difficult for newbies to get involved unless they come in through the VPNs, those virtual private networks, and access overseas exchanges.
Looks like we had some extra zeros in that report I saw here. It turns out the FBI seized nearly $400,000 worth of cryptocurrencies from Binance accounts in May, according to public notices filed this month. So certainly there's always a lot of talk about how crypto is used in criminal activity. But as you reminded us, crypto can actually be traced rather effectively, right? Every single crypto transaction.
Yeah, there are people who actively do just that, not just for either governmental or nefarious purposes, but people that are doing it because they want to know if a crypto wallet has not been opened in quite a while, and all of a sudden that wallet opens up and it goes, as they say, on chain, meaning that it could be sold on the market. People view that as potentially a signal to sell. Likewise, if a wallet who holds a lot of crypto opens up and starts buying more crypto, then they look at those large wallets that they refer to as whales as a good sign that perhaps the worst is over and the next up move is about to occur.
All right, at this point, John Najarian, let me ask you the big question here. Where are you putting money now and or taking it off the table? Well,
lately we've been trading a lot of one of Roger Federer's companies, which is ONON. That stock is called On Holdings, and it's running shoes in particular, but sports shoes and apparel of all sorts, known as ON Running, On Running, and so forth, On Cloud, and so forth. That one had been up over 100% year to date. Today, on their earnings, it fell rather dramatically, but it still seems that they've sort of got lightning in a bottle. And just like with whether it's an energy drink or a new shoe company that comes along and starts to dominate, the big boys and big girls tend to notice that and follow along, more or less trying to either imitate or accumulate, in other words, buy that stock. And so today's drop, although dramatic, we were more interested in, we were on the short side, luckily, but today we were covering, and I think there's still a lot of upside for that particular stock.
All right. Any coins, altcoins, or otherwise getting your attention?
No, not so much right now. I think as we get past Labor Day, just a couple weeks from now, 3 weeks from now, I think that'll be a better time for both crypto and perhaps some of the news around the back-to-school sales and how did they go. So that's really where we're focused right now. It hasn't been a dull summer, but it's certainly a bit of a lull, perhaps, from here after we finish August expiration.
All right. Any big conferences coming up where you'll be speaking, and what is the buzz and what is the mood since you're out and about so often and interacting with investors, crypto folks, and the movers and shakers out there?
Well, we'll have to see if we can get you involved out in Vegas, Frank, because we're going to be out there with Trade It Forward, basically a charity that is putting on a big conference in Vegas, September 21st through 24th. I'll reach out to you about that. But other than that, I hope to see you out in L.A. soon, sir.
That's wonderful. Well, John, thank you very, very much for joining us live here. It's always great to have you with us here and hope to see you out here in person again very, very soon. That is the one and only Dr. J, John Najarian, live with us here tonight, the co-founder of Market Rebellion. And, of course, as you just heard, the Laser Eyes on 2, following the cryptos very, very closely. John Najarian, thank you again very much for joining us. Folks, does your knee pain keep getting worse? How about that pain in your shoulder or hip or back? Don't let them tell you steroids and surgery are your only options. Take my advice now and call QC Kinetics. Frank Mottek here. QC Kinetics can make that pain go away with all natural advanced regenerative medicine. They're helping people here every day with these amazing natural treatments that restore and repair your damaged joint tissue. It's like turning back the clock. Regenerative medicine uses concentrated healing agents from your very own body to stimulate the damaged tissue in your joint so they can work like they're supposed to, and there's zero downtime. QC Kinetics is the nation's leader in this exciting medical breakthrough. Patients here are getting real lasting relief and are saying no to surgery and drugs. If you have pain due to injury or arthritis, this is a remarkable option that you need to check out, and the consultation is free. Call QC Kinetics in Glendale, the city of Orange, Mission Viejo, and now also in Costa Mesa. The number to call, 213-997-PAIN. 213-997-PAIN. Call now, 213-997-PAIN. 790 KBC welcomes, you guessed it, Ringo Starr coming to the Toyota Arena on September 17th. Tickets on sale now at Ticketmaster.com. That's right. Call now. Caller 9 wins at 1-888-790-5222. You can get a pair of tickets to the show if you're caller 9. Don't come easy unless you're caller 9. Call now, 1-888-790-5222 for Ringo Starr coming to the Toyota Arena on September 17th. Mottek on Money continues here in 790 KABC. The Dow coming in for a closing loss of 361 points at 34,947. The S&P 500 down 52 at 4,438. And the NASDAQ down 157 at 13,631. A lot of moving parts today, including China, what's happening on the legal and political scene, as well as the retail sales numbers, which have many people thinking the Fed might have to raise interest rates again. Is that even possible? Well, let's wait and see. The yield in the 10-year note, meanwhile, is moving higher to 4.21%. That's the highest we've seen since last October, impacting, among other things, the fixed-rate mortgage rates out there. And we'll talk about that coming up here shortly with Jeff LAZERSON, the president of MortgageGrader.com. The fear index, Wall Street fear index, the volatility index took an 11% pop today. The price of gold down $250 at $1,933 an ounce. That's a one-month low for gold. Oil still above 80, down 2 cents at $80.97 a barrel. At Southern California gas pumps, the damage has been done, with the regular moving higher again today by a couple of cents. $5.25 now, the average price for regular gas in the Los Angeles area. $5.58, the average price for premium. And diesel now moving higher as well to $5.76 a gallon on average. Among the cryptos, we see a Bitcoin up 18 at 29,197. Ethereum up about $1 at 1,828. And Doge at the moment at 7 cents. Mottek on Money continues here in 790 KBC. Dr. J. John NAJARIAN said it best. It certainly hasn't been a dull summer, that's for sure, especially for business news here. Thank you very much for listening to Mottek on Money here in 790 KBC. The hot labor summer continues in Los Angeles with the writers and the actors strike continuing. The hotel workers strike also out there. On the retail sales report out today, coming in better than expected. Meanwhile, smash and grab robberies, shoplifting, and outright thievery continues to impact retailers and ultimately you, the consumer, who's picking up the tab for the billions in losses at this point, sustained by retailers big and small. Let's bring in Mark WILBUR now, former chairman of the Los Angeles Business Federation, LA BizFed, former associate dean of the USC Marshall School of Business, and current chairman of Employers Group based here in Los Angeles. Mark WILBUR, thank you very much for taking the call here. And among the movers and shakers you talked to there at BizFed, give us your assessment of things here at the moment.
It's a really interesting time, Frank. I just pulled up an article today that from the California Association of Realtors. This isn't very good news. Less than 1 in 5 people in California can afford to buy a home. I mean, no wonder people are leaving the state, right? I mean, if you can't even afford a home here and there's no ability in this current economy to get ahead with, I don't know if you saw the report last week where the average citizen is spending hundreds of dollars more per month just for the basics to get by. I mean, it really has an impact. There's no money being saved right now, very little at all. And so people are digging into their retirement accounts. So today's retail news, I kind of laughed when I saw that because, well, yeah, of course they're going to make their numbers because they've been driving prices up for over a year with inflation. So it doesn't take as much product as it did before in a more competitive environment with the inflation up. You're able to make your numbers, with less purchases.
Absolutely right, including gas prices, I should add, because that's also part of the calculation. When gas prices go up, It looks like retail sales are going up too, so that is a very important point. Certainly you're watching what's happening on the labor front here with the hotels being impacted, and, of course, the Hollywood studios shut down at this point. A lot of dramatic things happening out there in the face of the cost of living people are dealing with here, and just driving around, you see what's happening here in the real world. Give us your assessment of how this labor situation is shaping up.
Well, the hotel strike is interesting because you're starting to come to the end of the vacation season. And without some major event coming to town or things like that, people will have alternatives to go to hotels that aren't dealing with the situation. You know, it is not all the hotels in Los Angeles, as we know. It is a certain segment of the hotels that have union positions. And so it's an interesting situation, and I think the pressure is going to start shifting more toward the employees within the unions because, you know, it's not going to be required for people to stay at those hotels. And so then it's going to put more pressure on, for sure, to be able to stay at places that aren't having to deal with a strike out front, because nobody wants to deal with that.
And now the issue is being talked about more, this thing that's going to be on the ballot next year where hotels will be required to put homeless people in with paying guests. If this is approved by the voters, this is an issue that's going to be coming up here next year, and of course is very heavily opposed by the hotel industry and pretty much the entire tourism industry here. What's the buzz you're picking up among the tourism people you're talking to here?
Well, I can't even imagine that passing. I mean, when people actually understand the facts associated with that proposition, it's crystal clear that this is one of the worst ideas ever floated to California voters. I mean, imagine, you know, some of the highest crime rates are within the homeless encampments, and it's terrible. It's a terrible situation. We can't seem to get our heads around fixing the situation. And so the crime rates in those areas are terrible. So you're going to take those people and put them into a hotel with people that are here on vacation from Canada, Germany, across the States, wherever. And so you're going to have somebody, you know, on a crack pipe in the same hallway as your family trying to get to and from your room. I mean, Frank, there is no person who is even remotely sane who's going to vote for that.
And it was the L.A. City Council that decided to put this to the voters next year. And by the way, it's being supported by the Hotel Workers Union Unite Here Local 11, which had gathered enough signatures to place it before the voters. So a lot of interesting things going on with that.
Yeah, you know, of course the union would want that, you know, because then it's going to be, you know, guaranteed, you know, labor rates and everything else for the hotels. I mean, it's basically government paying for those rooms to then put money into the union pockets. So, you know, that's the reality of the situation. But the truth is, you will decimate the tourist economy in Los Angeles by doing that. I mean, it'll just be a complete disaster. It'll be good for Airbnb, that's for sure.
You might have heard Los Angeles business and civic leader Rick Caruso on this program last Friday talking about what happened recently at one of his properties, Americana at Brand, with that dramatic smash and grab incident at one of the stores there. And it happened again over the weekend in Woodland Hills at another store there. Certainly the smash and grab robberies and shoplifting continuing, impacting everyone out there, and obviously terrorizing law-abiding shoppers who go to these places, and obviously the retailers impacted by all this. What's your reaction to what's happened recently here?
Well, you know, it's what we I guess the voters desired, because, you know, they put Gascon in office, they had a chance to recall him, didn't do it, and, you know, so now we're sitting here with this no cash bail with literally no consequences to criminal activity. You know, people can go and do this. They could find all 30 people from Americana, and guess what? They're probably just going to be out back on the street 15 minutes later. I mean, that's how this is going right now, and it's very frustrating. It's gotten so bad in San Francisco. I was reading a report yesterday that some of the major employers in downtown San Francisco are just telling people, don't come in and work from home, and they're having to go back to almost the COVID era of working remotely because the crime rate is so high they don't want employees driving into downtown. I mean, that's hard to believe, Frank, that people are okay with this. And it's just as bad in Los Angeles. You probably saw the article from that was quoting 50 Cent, you know, talking about that he never thought he'd be on this train, but he said, you know, Los Angeles is done. It is a complete disaster, and I couldn't agree more.
Well, the pendulum definitely needs to swing in the other direction at this point when you have Starbucks closing, even at one of the most famous intersections in the whole world at the corner of Hollywood and Vine. Unbelievable to see an empty store there in the corner that used to be a Starbucks, but it certainly speaks for itself when something like that happens.
Yeah, it's really frustrating because there's almost no place you can go without being concerned for the safety and well-being of your family and friends that are with you. You really have to think ahead about where you're going to go, how you're going to get there. I mean, Metro's dealing with all these issues now as well, safety in rail transportation and the Metro system. I mean, and they're at least trying to do something about it, but it's a big hole they're in. And so, we're trying to get people back into public transportation, but that still isn't happening yet. So it's, it all feeds on itself. And if you don't have a safe environment, which, we have had in the past with some of our stronger mayors, we haven't had this situation. And now we're in a situation where you literally are concerned about going to a basic restaurant in the evening and being either harassed or in the middle of a confrontation or a middle of a theft situation. And that's really hard to believe that we're in Los Angeles and have to worry about that.
Mark Wilbur, the former chairman of the Los Angeles Business Federation, LA BizFed, former associate dean of the USC Marshall School of Business, current chair of Employers Group. Thank you very much, Mark Wilbur, for joining us live here tonight.
Thanks for having me on, Frank.
All right, have a wonderful evening, Mark Wilbur, and we'll continue to follow all these big stories with you and right here on Mottek on Money on 790 KABC. Folks, it's jarring to have a car accident and hard to think clearly when you're hurt. So my friend, attorney Clark Fielding of Fielding Law, has created something to help you. It's a guide called Be Prepared Before a Motor Vehicle Accident. The guide is one page, fits right there in your glove compartment, and gives you everything you need in case you're hurt in an accident. Go to clarkthesharklaw.com and download your free one-page guide and keep it right there in your glove box and put Clark Fielding's number in your phone, too, under the word accident. So all you have to do is hit the number when you need him. Tell your family and friends to do the same. So if you're hurt in an accident, call the one we all trust, attorney Clark Fielding, 833-88-SHARK. That's 833-88-SHARK, 833-88-SHARK, and download the Be Prepared Before a Motor Vehicle Accident Guide at clarkthesharklaw.com. Again, that's clarkthesharklaw.com. Mottek on Money continues here in 790 KABC. Mortgage rates hit a 20-year high last year. Are we heading back there again? Well, mortgage rates have ticked higher every day for the past week. Nervous time again in the real estate business. Let's get an update on what's happening now. Jeff Lazerson live with us now, president of MortgageGrader.com, for a laser focus on what's happening in the mortgage business. He's also Orange County Register real estate columnist. Jeff Lazerson, thank you very much for taking the call here tonight. Jeff, first of all, how are those rates looking right now?
Frank, I love that song that you have in the intro. It's a rich man's world, because it sure is right now. It's only the rich people that are doing stuff. So the 30-year fix today is at 6 3/4% at one point. The 15-year fix is at 6 3/8% at one point, and that's up to $726,200. So $726,201 to $1,089,300 in Los Angeles and Orange County only. The 30-year fix is at 7% at one point. The 15 years at 6 3/4% at one point. Jumbo rates are about 7 1/8 at one point. FHA and VA is about 6.5%, and last week the Freddie Mac rate was at 6.96%, and I fully expect this week it's going to be north of 7% when the number comes out on Thursday morning. And of course, you have prime rate that's all the way up to 8.5%.
Right, and that impacts the adjustable rate mortgages, right, and the home equity lines of credit. And so we have the yield in the 10-year note now at 4.21%. That's the highest we've seen since last October. That impacts the fixed rates, right, Jeff? So how much higher do you think rates are going here?
They're going to get a little bit north of 7%, and then I think, the U.S. economy at some point is just going to say uncle, and it's just going to, even though that seems like consumers are still spending and stuff, I'm seeing more tension with people. There's more job losses in tech. I mean, the real estate world, which is 18-20% of the GDP, I mean, that industry is struggling. So a lot of those folks have quit spending money. So I think we're going to hit a wall, and then rates will come crashing down. But it's probably going to be 6 months from now. And for now, though, what we're seeing out there on the streets is people with large down payments or all cash are getting the deals. The first time buyers are very discouraged. They're just saying, "Forget it. We'll sit it out on the sidelines." And I was listening to your show earlier with your other guests, and I was penciling out some payments, like for a $500,000 loan. Just say it was at 3.5%, a couple of years ago. I know the rates were probably a little lower than that for some people, but figure $500,000 at 3.5%. That's the payment was $2,246, principal and interest $2,246. Today, at 6 3/4, the principal interest is $3,243, or $997 higher, and that's net cash to you. That's after taxes. I mean, so it's what is it, $1,500, $1,800, depending on what your tax bracket is, more that you would have to make to make that up. So people with little down payment, they're just scared and they're just waiting and sitting on the sidelines and paying really high rent.
Yep, and saying uncle. Those are the ones saying uncle at this point, given affordability and availability, the ongoing issues here in this area. And Jeff, what about home prices? Are we seeing some cracks there?
Not yet. I mean, not in Southern California. I mean, the Inland Empire, maybe a little bit softer, but not even really there. I mean, it's still pretty steady, just because the inventory level is so low, and it's people with the cash that have the money that are still doing stuff, because there's almost nothing to buy. Homeowners insurance is becoming a really huge issue now. Can you even get homeowners insurance? And if you can get it, what's it going to cost you? It's just staggering what they're charging. Or if you go to that California Fair plan, it's just astronomical. And so what you're seeing is, we're not going to have any movement on more home building or anything. So people with money, they're buying stuff up, even though they're holding their nose doing it, because they know they're buying high. But, prices are not going to drop. What's going to happen is when rates come down, you're going to have a bunch more people in the market again trying to buy, and it's just going to push prices up even further. So if any of your listeners out there are thinking about it, the best thing to do is buy now if you can, because it's going to be worse for you when rates drop. You're going to have a lot more competition, just like you had a couple of years ago.
All right. What about the private equity folks and the corporations that have come in after the Great Recession that bought up so many places? Is that still a thing here?
Yeah, it is. I mean, there's still big companies with owning the rentals and the apartments and stuff. Actually, there is that one crack. It's the apartment buildings now. There's a lot of debt coming due between, I think it's 2024 and 2027, and apartment loans are generally written for 5, 7, 10 years with a balloon payment. And it's a complicated formula. It's like we call it debt service coverage ratio. And if you have to try to refinance those loans that you got at 3 or 4 or 5%, and then you have to plug in the numbers based on 6, 7, 8%, it's really hard to make that stuff penciled for a lender to give you a loan. The mid-sized banks are out. And, so there's more hard money apartment loans. That's actually a big crack in the system right now.
Right, along with commercial real estate in general, even industrial apparently has come under some pressure with some vacant warehouse space, right? More so than before, even in the Inland Empire. And then office space, of course, the see-through buildings.
Yeah, you're not kidding. Even the building I'm in down in Laguna Niguel, it's a beautiful building, and on our office side, I'm in a ghost town. There's a couple of us on this side of the building. I mean, there's almost nobody here, and it's sad. It's a beautiful building, and there's nobody here
except you.
Yeah, except me on my phone with my buddy Frank Mottek.
That's
talking about mortgages.
That's right, and we see you there as the sun sets in Laguna Niguel, right? And the see-through building, there you are on the phone. And, well, Jeff, we always appreciate you coming to that line, and thank you so very, very much for that important update tonight. And, of course, we will stay on real estate and mortgage rates and the whole works here with you. That is Jeff Lazerson, the president of MortgageGrader.com and Orange County Register real estate columnist. We'll look for your column again this weekend, Jeff. Thank you very much for taking the call.
Thanks, Frank.
And coming up, Stay tuned for the 790 KBC News Blitz. I'll be back again tomorrow evening in the 5 o'clock hour. You can also bring up the Mottek on Money podcast on demand at kbc.com, Apple, iTunes, all your favorite podcast platforms. This is Mottek on Money on 790 KBC.